Good afternoon, everyone, and welcome to TBR's webinar, Competition Heats Up and the Race to be the Orchestration and Management Standard for the Third Platform, with TBR Principal Analyst Jeff Willicott and Analyst Andrew Smith. I'm Justin Sargent, and I'm your host of today's webinar. Information management and middleware providers are faced with a complex, extended process of re-engineering traditional products to be more compatible with customer migrations to cloud. This process is disrupting traditional business models and is changing how vendors go to market and win in the management and middleware space. The result is sustained waves of innovation, M&A activity, and new partnerships designed to widen vendor integration capabilities and position leading providers as the orchestration layer of choice beneath increasingly complex cloud platforms. Today's webinar will share insights from our Infrastructure Management Software Vendor Benchmark. If you'd like to learn more about this report, please reach out to myself or one of the analysts after the presentation. Before we begin, there are a few housekeeping items I'd like to cover. First, we will be recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit our YouTube site to view this presentation as well as any of the others we've posted. Second, we welcome questions from the audience. Please send them to the Q&A function, and we will address as many as we can at the end of the presentation. And finally, we will follow up with all of you within 24 hours with the link to the recording of today's presentation as well as the slides from today's webinar. We will also post all of our slides onto our SlideShare at slideshare.net/TBR_market_insight. Now let me introduce the analyst presenting today. Jeff Willicott is Principal Analyst in TBR's software practice and oversees a syndicated research team for the software and BI services practice. Andrew Smith is an analyst in TBR's software practice and leads quarterly syndicated research of top infrastructure and systems management software vendors, including Dell, HP, IBM, and CA Technologies. And with that, let me hand this over to Jeff and Andrew.
Thank you, Justin. If we can move through the slides here, what we will do here, as we do in all webinars, is first we'll give you a quick overview on the content enhancements that we have done to the webinar deck from the prior quarter. We'll then go into what is the current market state, and then after that, we always come in with some top 3 topics that we think are of particular interest in the quarter. These scenarios are going to be discussed later on in the deck. So if we can jump to the next slide and keep going. Yeah, go one more. That last one is a paid ad. If you want to see what we have for reports, you can. Besides the infrastructure management benchmark, we have an application software benchmark. You can see the companies here that are covered in that with the arrows on the right. And we also do work in the BI space, looking at the independent software firms that are in there. We have a broader range that are in there. Some of them are smaller when we're getting into the tools areas. What we've done for enhancements this quarter is, per some of the user feedback, we added, you'll see it when we get into bubble charts, if this is the first time you've been through it, but we give you a gray bubble that we put on the chart to give you a rough idea of the size of the revenue opportunity that we're talking about. Actuate was acquired by OpenText, so we've merged those two together. We added Splunk to the applications vendor benchmark as a result of that coming out. And one of the more significant ones, particularly for our subscribers, is the employee metrics in the appendix. We aggregate IM and apps revenue for greater accuracy in the assessment. We weren't going to try to pull out revenue estimates if the sales reps are selling the same portfolio. It's a time management effort, and our estimating capabilities for a benchmark would be more challenged. It requires far more research. We can do it, but it's something that we'll do more on a custom basis for greater accuracy depending on how our clients want to define it. And then future extensions. Each of these benchmarks, I say the same thing, is we welcome the feedback from you in terms of what content you believe is interesting or how we can reformat it to better enable you to quickly socialize this information internal to your other company stakeholders, particularly around the slides, if you want to pull one or two to forward regarding some pressing point you may have within your own business that our research can help inform. So let's just get into the detail here on the next two slides. The first one is on the operating metrics. So what happened? Basically, it is a continuation of the same theme that we've seen over the last couple of quarters, only it's accelerating. And it's not accelerating in what I will call a good way if you're a vendor who operates in this space. And by this I mean the 1Q15 operating margin was at 14.8% in our estimates. And that's down both year to year and quarter to quarter. Right? A year ago it was 21.5, and a quarter ago it was 18.3. So that's a pretty big drop on the operating margin perspective, and that all kind of ties in to the shift from license to subscription that we've been talking about for several different years and is really starting to take off. That's the biggest hit that we have seen on this, and that's why we have unbundled our product revenue in the last two iterations to model out the subscription base versus a license base. And there's some very stark shifts that you're going to see when we get into it. Second point is that the vendors just have to adapt the business models to align with the expenses, and that gets into the idea born-in-the-cloud companies really have yet to show very, very much in the way of consistent profits. The exemplar out there, I think the company to study to know how to do this is Red Hat. They've been at it for 15 years. They had the benefit of not necessarily having a license base to begin with, that, you know, it's that old game of how quick do you migrate or how long can you hold and maintain the cash cow that is the maintenance and license margins in the 90% versus a subscription margin in the 40 or 50%. That's a tough internal challenge for vendors to navigate. Red Hat doesn't have the legacy license base, if you will, that they need to protect. They've always been in subscription, and they're doing a great job of it. And then lastly, it's just, you know, time is of the essence right now. The speed at which the industry is changing the nature of ecosystem development. It's changing the way in which vendors try to partner with the people that are within the community. And the more and more that we move to open technologies, which commoditize a lot of what we do, and we have to migrate up the stack and provide more value, but it also changes who you need to look at within the ecosystem in terms of who's feeding in IP that we can then industrialize it, for lack of a better word, into enterprise-grade services and support. And the bottom line is, more and more of the contributions to the ecosystem partnership are going to be coming from end customers. And that's a much different way to look at a partner community than the traditional value-added reseller, independent software, ISV type of gold, platinum, bronze tiering of programs that have been going on since the early 80s when I started researching these things. There's a big shift that's taking place in the way in which we evaluate these things. From a market research perspective, what we provide to you in the community, we have to change how we do it as well. If you're at all interested in that, I released a commentary on that last Friday, and I'll be more than happy to send it to you and would be eager to discuss it with you as well. So with that, let's move. So we're going to go through the financials. When we get done with the financials, we always have what we call scenario topics. The three scenario topics that we'll take a look at for you today is the platform vendors messaging the optimization and simplicity, and how that kind of runs counter to the prevailing end customer research that says one of the benefits to cloud is the idea that there will not be this vendor lock-in. So you have this unique idea where Oracle really seems to be tacking against the prevailing trade winds on this, pushing the all-Oracle stack. It's not unfamiliar for Oracle to go this way. I sometimes flippantly joke it's that Larry Ellison's trying to party like it's 1989. He seems to be trying to use the old playbook here, and I question whether or not it's going to work, to be blunt. And then on the other side of this, somebody who was the master of vendor lock-in years ago, I was at the IBM Cloud Strategy Day in New York a couple of weeks ago, and the IBM exec that was leading this thing stated quite clearly, IBM knows it can't go it alone, and that they have to be out there working with open standards, and then industrializing the services that they have and provide the wraparound services based on more and more open technologies. And that's the way IBM and the platform war is going relative, and Oracle is trying to go with the all-Oracle stack. So that's the first thing we'll take a look at when we get through the bubble charts and the numbers. The second one is for the IM-centric vendors, they have to evolve the technology offerings to simplify integrating competing platform alternatives. Here's where Red Hat has a big, big opportunity as OpenStack increasingly is becoming, we'll call it the de facto cloud infrastructure standard for lack of any greater clarity. And if you think about that, those are building blocks. Those are bricks, if you will, and then you need the mortar to keep those things together. So if you think of the core technology componentry as the bricks, the IM vendor software and the enterprise-grade services they provide for that software, some of which is free because it's coming out of the open communities, that's the cement that'll keep that infrastructure together. And that is why the last topic we have is just that the business models built around the open technologies have to be services-led. Red Hat generates $2 billion a year supporting a free software product, to oversimplify it to make the point. And more that's going to happen. The value creation is not in the technology itself. It's in the service and the business value that that technology can generate, and that requires education and therefore requires services. So these last three we'll get through after we go through the numbers, which is where we'll head into next. I'll take a little bit of time on the first slide here to orient any new users to it. The changes to them from those of you who have seen these in prior webinars, if you've been following along. In the upper right on this slide is the gray bubble that gives you the bubble size reference. So that is $1 billion. That's what that bubble reference is $1 billion. So unfortunately, based on where the real bubbles come out on these slides, we can't put it in the same spot. It moves all over the slide, but it's there to give you the reference. So that's sort of for the eye appeal. The other thing we've done where we're seeing more and more of this, both in applications and in infrastructure management, is rather than growth, contraction. And so therefore we're using red lines for that average to give you just a quick jolt as you're reading the chart to realize that it's going the wrong way. So what this all says is that the infrastructure management revenue growth, revenue declined 2.2%. Operating margin performance was at 14.8. So that's why we have the call out to Red Hat as the new standard. They're sitting right around the average. They've been banging out very consistent operating margin performance with a very steady subscription base, regularly increasing the value of the subscriptions at the renewal time. These are all metrics their CFO puts out in the earnings calls. And they have a very efficient, well-run operation that is, while it's not necessarily throwing off telephone number growth rates or margin performance gains, it's a very steady, healthy business, and it's likely the new normal for a business model for the people who want to play in this space. And they deserve a lot of attention and a lot of credit for what they've been doing. In the upper left, you see ServiceNow as a disruptor. They're following a traditional cloud model in the sense that they've got the great sequential growth rates, and yet they're not turning a profit. And at some point in time, the market is going to turn on, it's my opinion, the market will turn on these cloud companies and begin to demand seeing some profitable results from what they're doing. I lived through the dot-com bubble, and I wonder if we're not nearing a point where we're going to see something similar around the cloud space. Clearly, there's going to be consolidation over the next 5 years within this space. Some of it could be very striking. Who's going to go first and where is anybody's guess. We've seen it in the OpenStack community, primarily due to the need for the services capability that people are buying up, which goes back to the idea that these open technologies are a service-led play. But that's the overall revenue related to infrastructure management. The next slide, what this shows you is product revenue. Now that is a combination of license and subscription. So what you see here, let's go to VMware and Red Hat. The upper arrow is talking about the mix shift. So VMware's having a little bit more trouble here as they're migrating over to a license base to the cloud service providers rather than working almost exclusively within the enterprise side. So there's some erosion going on there. Red Hat's doing a little bit better. They're a little bit further to the right on this based on the fact that they, as I said earlier at the top, are almost exclusively or are exclusively a subscription-only business model. You have down in that lower left, kind of buried right on the axis, is SAP, and their challenge there is well known as the conversions to S/4HANA, and that's a big lift. That's the database. That's a lot of legacy investment. That isn't something large enterprise is going to go on overnight. That will take some time, and it's going to be a slow roll. It'll be a slow roll for them and for Oracle with 12c. Conversely now, if you see Microsoft sort of buried there right in the center, they're the 300-pound gorilla. They have a considerably more benefit with Windows Server being an embedded legacy app. I mean, if you look at the enterprise operating systems that are out there today, it's really going to shake out into enterprise Linux versus Windows Server in terms of future development. In any and all cloud fabrics, data fabrics will be either running one of those two operating systems for the most part. OpenStack clearly taking the enterprise Linux route, and Microsoft quite clearly pushing hard with the Azure platform and what that all entails. If we can now jump to the next one. This is where we're taking a look just at license contraction, I should say. It says growth, but the license base for the people that we modeled sits at a negative 8%. And as you can see here with this, I'm sorry, there's things jumping up on the screen. I got distracted. I apologize. And so what you can see here is the migration management that Microsoft is doing very, very well, sitting there in the center of the bubble. You see some of the challenging firms that are there. IBM software is getting hit there. Some of that is purposeful, I would believe, as they make the bigger and bigger investments around the Bluemix platform. And what they're also offering is Bluemix Local. So the days of those massive contracts for application and development tools are going away. Containerization microservices are impacting that as well, plus the fact that you can just subscribe on the PaaS layer. So you see CA sitting there relatively challenged. You see IBM out on the lower left. Some of that a very conscious migration. There's very few on the license side who are in positive territory. Now this contrasts very nicely to the next slide, which shows you all the subscription year-over-year gains, which are at 48%. Now that's 48% on a much smaller denominator, but this is where everybody is moving. And again, here Red Hat looks, shall we say, their performance pales in comparison, but that's because they've always been here. So therefore their sequential growth performance is not going to have the high numbers. You have ServiceNow in the upper right. They look great, but again, remember, they're not making any money. Red Hat is. You see their Oracle, they're doing the aggressive shift to the cloud. That's all their messaging that's going on with respect to this, and that has impact in terms of PaaS coming up and growing faster than even Oracle expected. And PaaS, if you think about it, is going to be the sandbox test to, do we want to roll to 12c as a database? Do we want to have these applications go live? We'll test it on PaaS, and then we'll activate it either on their own cloud or they'll put it up on a public cloud. So there's a lot of activity that Oracle's doing. They're very conscious about it. And then in the upper right, you also see Microsoft with a hold and grow, and PaaS is strategic to that. And by hold and grow, it means maintain that enterprise, allow them to use the PaaS layer to develop cloud-enabled applications, and then hope that they're going to put those on the captive Azure so it stays within the Oracle camp. If you now shift, wait a minute, we're at maintenance, okay, subscription, now we're hitting maintenance. So on the maintenance side, here's where it gets a little bit fuzzy, because what we know here that's going on is there will be the persistent decline in licenses is going to negatively impact the year forward maintenance base. And we're starting to see this. The maintenance revenue for the first time was in the negatives for this quarter. It dropped 2.6%. Some of that, there's a confluence of factors. Some of it is the retirements. Some of it is the lower entry point cost for these, and some of it is also the ability that some of the leading platform vendors, Oracle and SAP, we've talked about this in prior benchmarks, what they're doing and allowing early cancellation of multi-year agreements so they can take those funds and use it for subscription deployments. So this piece is one where we've seen licenses declining. We're seeing that accelerate. We're now seeing the maintenance start to decline, and we will expect those declines to accelerate as well, all of which is being offset by the increase on the subscription side when you take a look at product and maintenance. When you get into professional services, again, this was, I'll call this flat revenue. It was down by 0.3%. There's several different factors going on in here. The first is this need, and I'll take a look at Red Hat and Salesforce, and I think I should have added an arrow there for ServiceNow. Those three firms that are the high flyers within the subscription side of this are also beginning to build out advisory services. And the way in which Red Hat articulated it at their analyst conference a couple of weeks ago is probably the best I've heard in a while, is the idea that what they succeeded in doing was commoditizing the enterprise software space. As they made the claim, won it with RHEL and Enterprise Linux, and the next step is to migrate up the value stack. Given these have commoditized, they've got to keep building in better and better advisory services. And those advisory services are as much around how to reorganize and reskill internal enterprise IT development operations as it is to potentially do it for them. And so as you see some people out there making tuck-in acquisitions for OpenStack capabilities, a lot of cases those entities are doing it to for lack of a better word, graft cultural DNA into their organization by getting skilled labor that can essentially become trainers for the internal staff, as you need to redeploy those bodies and create the demand for these new services. Take your old legacy on-prem skill sets and human resources talent, retrain them, and scale them with the expertise you've acquired in to go after net new. But that isn't what Red Hat has to do. Red Hat has to almost do it the other way around. They need to find the skills they can buy to meet existing demand, because they are the market leader in the commoditization, if you will, of enterprise operating systems in the enterprise, on the enterprise side, and now they're moving over to the private cloud deployments, which are increasingly coalescing around OpenStack technologies, where they also have a significant play. You see in some cases EMC, to jump to the more traditional vendors, EMC is having an uptick in the transformation services. Again, this is that workload optimization and cloud readiness assessment of what are the infrastructure management tools you may need, which workloads ought to go. They can come in with almost a packaged custom engagement that runs about 6 weeks in length to be able to take that assessment and let the enterprise know what they need to do, and then, of course, try to follow on with any additional consulting services that wrap around with it. So increasingly, while this has been flat, we are not as convinced that this will maintain on the downward trajectory as we see license and maintenance. We believe this one has a speed bump, if you will, for those people in the late majority who are starting to take a look at this, who may indeed need some advisory services from a more technical aspect in terms of what do we do inside the data center, as opposed to the strategy-led services as the core domain of the Accentures, Deloitte's, IBM Global Services, which is more about business process transformation rather than IT development transformation. So with that, we'll get into the overarching themes, the first one being these platform vendors, message optimization and simplicity to overcome the concerns around vendor lock-in. And here's where I'll turn it over to Andrew. He'll take the lead, and I'll either be quiet or chime in here and there.
Thanks, Jeff. Yeah, so the way that we kind of look at some of the major themes across the benchmark vendors, one of them is grouping vendors into kind of a platform proprietary approach versus a more vendor agnostic kind of best of breed solution provisioning approach. That's kind of, the black versus white, easiest way to water it down. So we've got vendors like VMware, IBM, Microsoft, who are banking on that kind of platform approach. Typically, in the infrastructure management space, it's going to be about messaging around the optimization, the interoperability, and the cost reduction around that. But like Jeff said, as we kind of get into this, to get back into the brick and mortar analogy, you have these vendors who, like Red Hat, who a lot of times through the increasing prevalence of open solutions are quickly commoditizing swaths of the layers underneath those, or on top of those platforms, kind of forcing vendors to reevaluate where they provide differentiation, where they provide value. So in a lot of ways, that value conversation is moving up the stack, moving towards a lot of the business process, service delivery part of the conversation. So as there's kind of two converging strategies here. As vendors with their legacy platforms seek to stay relevant, to keep their branded platform as far into customer ecosystems as they can, we expect them to kind of leverage the professional services capabilities they have to provide that business value. And then you have more pure play vendors who, while they are pursuing that services led value as well, they're using the commoditization play to break up the platforms, really build on top of existing ecosystems with a kind of vendor agnostic approach, best of breed approach that they can leverage to their, sorry, I'm forgetting what I'm trying to say here, leverage to their benefit to displace some of the embedded vendors.
Okay, yeah, as you see with the vendor developments, Oracle opened a cloud development center in Toronto. They also have intent to develop the offices and cloud engineering center in San Francisco. IBM has been doing quite a bit of this too. They call them Bluemix garages. It ties somewhat to the shift that is going on as well in terms of how you can deploy for agile development versus waterfall development. It could, impact offshore ADM facilities for the likes of the Indian pure plays, where being in the same time zone is actually critical to the success of any agile development that goes on. And if you have an east-west offshore kind of deployment of where your staff is locating, that may not fit when you got to go to a north-south deployment to stay in the same time zones. And you couple that where Red Hat has released the Cloud Suite for applications, this is where they're coming at it with a full complement of tools that will make it simple regardless of whose platform you're trying to use.
Now, the second scenario we're focused on is, how IAM-centric vendors can leverage platform neutrality and consistent integration methodologies to carve a niche. Again, there's a larger push into vendor agnosticism here as kind of the increasing deployment of workloads on cloud platforms gives customers variety, gives customers more choice. So, some of the vendors that we focus on, or that we've been following closely here, Dell is one that kind of has, eschewed the typical platform or large services, professional services approach to provide, and instead provides pretty easy to stand up, easy to run solutions that are integrated and they're not.
Well, what you'll also see here as this goes is as we move to late majority adoption, the amount of time and effort that the end user or the enterprise teams are going to want to deploy and figuring out how to stitch these together. We're hearing a lot about the architectures, meaning the the vendors are articulating that it's as simple as a push of a button, as Larry Ellison will say about hybrid cloud deployment from 12c based on the multi-tenancy activations. But it is not that simple for the SMB and the global mid-market space, where they may not have the technical training or the financial investment to want to get into all the hardship that has been going on. It's one of the things that's been happening with, say, OpenStack adoption for private enterprise rather than for the public cloud builders to go after Amazon with the OpenStack technology. That was a pivot into the end user community. It wasn't really expected at the start and has been one of those unintended consequences that has reshaped that landscape with a lot of the recent acquisitions. So as these IAM-centric vendors need to remain and stay relevant, they've got to find a way to interoperate with all the major platform vendors, keep it a simple approach that, number one, can go to the global mid-market, but more importantly, will be easily executed by a partner community to go address these, because you can't take enterprise-grade selling efforts, given the expense associated with it, and drive that down market. You have to simplify and automate. And that's one of the ways these vendors are handling both the late majority of the large enterprise as well as drive it down market into the mid-market space.
Yeah, and thanks, Jeff. I think the other point I was trying to get out before I not so eloquently tongue-tied myself and froze was a lot of the conversations, or some of the conversations we've been having are kind of about where a lot of the professional services providers too, like Accenture, have a huge role in helping vendors, helping some of the IAM-centric vendors realize, I guess, that strategy or that vision of being a market vertical provider. You know, as a lot of vendors start to shift their messaging, shift their strategy, their sales strategy, and even their partner strategy towards that industry-specific, industry vertical approach to find that specialization. You know, there's certainly not everybody has built out that capability in-house, and not everybody has that experience. So we're going to continue to see, to Jeff's point, continue to see the traditional VAR or reseller relationship transform into more of a services-led business value relationship. And I think getting that part of having that part of the puzzle in place for these IAM-centric vendors is going to be, you know, that's going to be a very important task moving forward as they kind of, like Jeff said, find that niche, continue to stay relevant.
Right. The value isn't in the enterprise IT value is not going to be in optimizing an infrastructure. The enterprise IT value is shifting, we're all shifting higher up the stack. And internal IT has to move from assuring their lines of business they can keep the lights on and they have an optimal compute infrastructure underlying their business operations. They've got to drive it into better understanding their own lines of business. And if they're going to start taking on that role, then the IAM-centric vendors have to just come in and show them how simple it'll be to manage and monitor the infrastructure. And that's where the IAM-centric vendors can play a role, particularly for firms that are not necessarily inclined to embrace Oracle's all-red stack as an example of staying locked into one vendor's set of tools, or technologies, I should say, rather than tools.
All right, so finally we'll kind of dig deeper into I guess, the business model shifts and the technology shifts as they relate to kind of OpenStack, open standards that we're seeing as a pretty major factor in the space moving forward, especially with Red Hat as the industry exemplar. You know, seeing what they're doing with their subscription-based model and kind of the implications of what other vendors really have the potential to achieve. In our opinion. So earlier this quarter, there was quite a flurry of acquisition and partnership activity around OpenStack. Earlier this year, we've got even vendors like Symantec who are pushing farther into pushing their involvement in the OpenStack space even farther, kind of, I think, repositioning that Veritas business as best they can before the split. We saw IBM, Cisco, and Oracle all make acquisitions, purchases of OpenStack-related skills and technology during the quarter, and then, of course, we've got VMware who earlier or later last year increase their capabilities around OpenStack distribution, but is also continuing to embrace some open technologies, especially with Photon, kind of pushing back against the container trends and integrating that capability into their stack as well. So a lot of different pieces moving around here, but the point is that, you know, as we look at the way that the underlying IAM technology is changing, the way that open standards are commoditizing further up the platform and infrastructure as a service stack, as they did in the kind of the operating system layer, that's going to be, you know, the next major frontier in this benchmark space really is where, you know, a lot of vendors are going to be able to, I think, make or break, especially their profitability moving forward. But the point, one of the major, I guess, disparities that we're focused on is kind of this skills gap that is pervasive in the, especially in the OpenStack space, as that becomes one of the private cloud standards. And we heard this when we were at Red Hat, their summit a couple weeks ago. You know, we heard this loud and clear from the vendor as, you know, as being the vanguard, one of the, you know, major players in the space. They were pretty open and honest about the headwinds that they face in some of their customer ecosystems in terms of implementation, training, and creating interoperability themselves. You know, this is a space that customers as well as the vendors are struggling to create best practices, repeatable frameworks that make the implementation of OpenStack, the migration of workloads onto that platform as easy and painless as possible. So when you start to see some industry heavyweights like Cisco, IBM, and Oracle continue to throw their hat into the ring, I think it should give vendors like Red Hat pause, because of the amount of resources that people like IBM and Cisco can bring to bear, the amount of skills that they can quickly ramp up, and the amount of professional services that they can bring to the table when it comes to implementation and optimization. So this is kind of the area that we're following very closely here. Jeff, is there?
Yeah,
did I miss anything important?
Well, I don't know. I can add. I don't know if you missed anything, but when I look at this, as I said earlier, looking at the partner ecosystems, did or have been doing a lot of market research into that interaction between the small vendors, the small partners, and the large vendors. It's kind of like they're both dogs, but one's a Chihuahua and one's a Great Dane, and how they play together is very, very critical. The Dane needs to learn to be a little bit more respectful of the limitations and preferences of the Chihuahua. Well, when you get into the ecosystems, that's ever more prevalent. And one of the places where I've seen the biggest shift in their standard attributes, you ask, how important is this and how satisfied are you? And the one where I've seen the biggest change in the sentiment, meaning how valuable is it or how important is it, is education and training. You go back several decades and the partner community resisted it. They resented it. It was just swapping out motherboards. A trained ape could do it. Why do I have to get certified? I have to pull my guys out of the field. I've got to pay money for this. It's a pain. Why do they make me do it? That was the standard sentiment when I started doing this work years ago. Today, they clamor. The partner community clamors for the IP, the access to the knowledge, because they know in this always-on, always-up world, they have to be able to diagnose it in advance of a failure in the best case. And even if it does go down, they've got to do it within hours or there's a penalty. So that shift in, they want the education and training. They want it in multiple different forms. They want it free. They want it instructor-led. They want it, self-paced curriculums and tutorials. That's been going on in the partner community because they were writing the applications first. Now it's cascading into the enterprise community. The enterprise IT, the way, I'm going to use a skiing analogy, hopefully folks have some understanding of it, is the idea that we as an industry are out ahead of our skis. The technology and the capabilities of the technology that we have brought to market over the past decade through our continuous innovation that's being accelerated by analytics, in part also is analytics. That innovation, the consumers of it, the business consumers of it, are not trained enough to fully understand what they can do with it. And we need, there will be a pause here as we have to train the enterprise IT shops on what to do, how to do it. It's great to say you're going to go to agile development or you're going to go to microservices, but what does that do to your DevOps functions? Where do you do the testing? In microservices, you're going to move it further to the left and have it more with the development rather than kind of at the back end. That may mean taking some of the older bulls or older dogs that might not want to learn some new tricks and get them to kind of do their own test at very, very early in the process, particularly if you're doing the microservices that are stitching together to create the whole website, where you got to look for the application at rest and make sure the endpoints are the same. You could be using all sorts of different application development tools as you're getting that done. So there's a huge amount of activity that's going on there that requires the vendors to provide easy-to-consume, easy-to-use technology and training materials. And it will be a differentiator when it gets down to adoption, because those who make it the easiest for enterprise IT to make the shift, they're already concerned with subscription revenue, shadow IT taking away some of their control within internal fiefdom when you just talk internal enterprise politics. They need some hand-holding, they need some education and guidance, and it's got to be simple and easy for them to consume. Now with that, we'll move, we do have a couple questions. We certainly welcome them. We like to leave enough time at the end to go through these. But one that did come in, again, we welcome more, but one of the ones that came in was asking about the economic shifts and what we think is going to happen. That's a fun question. You've got two of them. The one that's been getting the most noise has been Greece and what it's going to do to the European community, but the quiet one that could really be an El Kabong for 3Q15 results is also the downdraft in the Chinese stock market that has suspended trading on some. It's seen them lose. They've lost more wealth than I believe it was the UK GDP. It's a lot of private investors who are losing that. So in the Chinese market and therefore in APJ, we would expect to see a considerable downdraft, particularly on those that are offering technology, that are building the technology offers for the Chinese consumer market. It's hard to say what the enterprises will do there, given the tight linking with government and what may be some of their own initiatives there. It's tougher to give a forecast there. When you jump over to Greece, I think again, this is opinion. The issue with Greece is more of an impact, I think, in the economies of France and Germany as a result, because what I believe the bigger issue there is of protecting the French and German banks who have done a lot of the lending into Greece, and hence the insistence that they pay back those loans rather than write them down. I would expect that to stall and push out a lot of major decisions there pending resolution of what is going to happen. It seems as though it's been resolved, but that hiccup could cast a pall on any major new technology refreshes in the EMEA market that could be dragging along the different pieces of this infrastructure. So hopefully that answers that question. And there's another one here. Okay, you mentioned a skills gap relative to new platforms, specifically OpenStack. What are vendors doing to overcome this? Do you want to take a shot?
Yeah. So I guess some specific examples. We had last quarter we had HP. HP plans to allow partners access to its consulting sales model based on its services methodology. Or that was at the end of last year. Sorry. So this is, something to drive, I guess, something to help partners drive their own capabilities, be closer to the HP ecosystem, kind of the best practices or the guardrails that they've set up, and help that, I guess, really help and educate and train not only well, educate and train customers better on these mission-critical cloud management technologies that they're more and more having to migrate to and integrate with. Also, VMware, the no naked vSphere policy is their major push to kind of expand not only their internal sales but also partner capabilities as well. It's about integration, about cross sales, to take that value proposition past just vSphere over to things like NSX. And then I'd also add, Citrix had a pretty large partner overhaul last quarter as well. In addition to doing some reorganization of the way that their product portfolios are set up, Citrix has undergone a pretty specific push to be an as-a-service company. So that's kind of pushing more of the services-led products to the forefront of the portfolio. That's things like share file, go to meeting, write signature. Those are kind of where the value, where the customer engagement part of this new model is really going to, I guess, where the rubber hits the road.
Okay. We have another question. How do you see enterprise adoption of AWS and Azure for production workloads? Is it more DevOps for test dev and then migrate back on-premise? Is it more customer-facing apps, websites, and public cloud interfacing with back-end on-premise? I'm going to give you a classic consulting answer and say yes. By that I mean, in each case, one of the key areas for this is to be able to have sort of elastic compute for the sandbox or the DevOps capabilities. So clearly, Azure, Oracle PaaS. I'm less familiar with AWS. We can pull these comments and have the cloud team talk to you about that as well. But what we see is a lot of test and development and trial tests of new workloads going onto the app platform. Now, whether it's testing dev and then migrate back on-prem, I would argue that was some of the work. And then on the other side of this is for the native cloud apps. So are they refreshing the systems of engagement? Are they refreshing the systems of record, or are they building out net new systems of engagement? So I would say both are involved in there right now, and I know that for a fact. Now, my opinion is, because what I don't know is which way the workload goes, I would assume more of the workload is on the native cloud app development because they want to be able to see it'll work on the infrastructure, because the migration from some end customer research I did about 10 months ago, even though you feel you've optimized a legacy app for the cloud, when you migrate it up and over, there's a lot of work that needs to go on where these individuals were saying the more that was automated by, say, an AWS for a bridge up and over, the easier it would be. There was still a heavy workload associated with that. But clearly, the PaaS layer is increasing out there as a driver for the demand, and it's because of those multiple factors. Elastic compute, so you don't have to have as much tied up for your app dev. It can be an OpEx basis rather than a CapEx basis. Test beds for native cloud development, and then test beds for, I'll call it legacy app transformation to allow it to be used in a hybrid cloud platform. So hopefully that answers the question. By all means, email us, though, on that one. Now, we had another question saying it might be offline, but do you have any visibility or model how many VMs run in AWS? I can quickly answer that. No. If yes, a breakdown within AWS would be great. I'm going to take that question and get it back to our cloud team and see if we have anything and try to follow up. I'm not sure if I have that gentleman's email, but I'll see if we have it in our CRM, and I will definitely get back to you on that. Excellent. Any other questions? If not, I know we have a survey on this. We welcome your feedback. Again, anything we can add to this, anything you feel we belabor, you'd like us to strip out, Are the charts readable enough? Do they convey the point we're trying to get across? Any other vendors you think we ought to be tracking in here? As I said, we do this for you and for your community, and anything we can do to improve upon it, we'd like to hear it from you, and we'll do our best to respond.
All right, well, I think that's all we have for questions. So thank you, Jeff and Andrew, and thank you, everyone, for your questions. You can follow Jeff and Andrew, as well as TDR, on Twitter at the handles listed here. And please check out our pages on the slides here on YouTube as well. And additionally, before you sign off, we will have a quick survey there. So as Jeff said, if you have any questions or comments on ways we can improve these presentations, please feel free to leave us a message there. Otherwise, thank you, and have a great afternoon.